What's going on, y'all? This is Stormy Madison with Stormy Matt TV, a place for realtors, prospective clients, and or business owners. Man, I appreciate y'all tuning in, and no matter where y'all watching it at, I just need a little help. I need y'all to do them social things just to help us with the algorithm. We want to get engagement so more people can see this video, so more people can learn from this, and it can just keep popping up everywhere, man. If you scratch our back, we'll scratch yours with this good information. I appreciate it. So let's dive into it. We don't like to give a whole bunch of fluff. We're going to talk about in this video how to become a homeowner in 2020 going into 2021, because I know a lot of y'all want to know. I want to know how y'all want to know how to become a strong buyer, what things to do, what things not to do. So in this video, we're going to discuss those things. Let's go ahead and dive right in. I appreciate y'all. So let's go. Number one, how much money do I need down? Because things get funny when we talk about the money, right? How much money do I need to put down? That truly depends on which way you go with the type of loan that you choose that makes more sense for you. So I'll give you off top a quick nugget. 70% or so of people seem to choose a conventional loan. So this is a national average, okay? I wonder why they choosing a conventional loan. Well, what happens is these 70% of the people have a 680 or above on their credit score, and also through working and savings, they're able to put down anywhere between 10 to 15%. So if you're looking for a conventional loan, you're looking to say, okay, I'm gonna have at least 10 to 20% of my purchase price. All right, so if I have a $200,000 house, I'm ready to say, okay, I got $20,000 to put down. My credit score is above 680. I'm ready to rock out. On the contrary, we have what's called the FHA loan. And this is a highly used loan as well. This is a lot of time for first-time home buyers who may have not saved as much money yet. Maybe this is not their forever home. And with that being said, they only have like 3.5% to put down, and they understand that this game of life is like that. It's the game of life. Usually when you coming in low, you always got to deal with something being a little bit higher. By saying that, what I mean is you're going FHA, and FHA tends to have higher interest rates than the conventional loan. You have to pay a certain type of insurance that's attached to the loan. So in the long run, yeah, you started off by putting up less, but in the long run, you might end up paying more. But if that's the way you have to go, that's the way you have to go. So if you take a look at my videos, I do have FHA, USDA, and other type of videos that you can look at to kind of just find out more specifically about that. All right. How to build your credit. I'm not a credit advisor. I know some of the basic thing. Yeah, people always talk about, hey, should I dispute this? What kind of letter should I send? What should I pay off? Should I pay off student loans? Should I worry about hospital bills? What I say about this is, if I'm going to get my teeth pulled, um, I want to go to a dentist. I can't ask the pediatrician about that. So me, I'm a real estate businessman type of guy. Yet I have tagged below our personal consultant who we use. I say you should at least consult with a credit specialist. Always do your self-serve research. Basic tips: if you can, pay off any high interest revolving credit if you can. If you got a balance of, if you have a limit of 1,000, let's keep them balances up under 30%. You know what? Let's keep them up under 20% so we can make sure that you good. Okay. Let's make sure that for the last 12 months we had on-time payments, on-time mortgage payments. If we didn't have on-time mortgage payments, a lot of times they're gonna want to know, have letters and all that stuff. But how to build your credit, for the most part, on-time payments, keeping your balances minimum, and on-time payments. I mean, that can't happen overnight for some people. But if you need a specialist, like I say, look below. I have a trustworthy specialist, not just trustworthy, but with many results as well. So, what else do you need to do to buy a home in 2020 going into 2021? Man, listen, you need to get pre-qualified from a professional lender. I know a lot of y'all want to work with big banks, and I'm not hating on big banks. I'm not saying don't work with the big banks, but a lot of times when you go walk into your bank and they put you with a home loan person, what happens is this person is 5 states away taking phone calls, and the chances of you having a intimate process or a lifeline type communication where you just got questions, you can get them, it may be slim. I'm not knocking all of them. I'm just saying it may be slim. So try to find, if you can, a local. When I say local, maybe 30 miles away, lender. What's that person gonna look for you to have when it's time for you to get pre-qualified? Well, for one, let's say that you're not self-employed, because when you are self-employed, they just need like double the stuff, it seemed like. But if you're not, what they may ask for your 2 years of tax returns. They may ask for the last 2 to 6 months of pay stubs. They may ask for the last 2 to 6 months of bank statements. And they may also want to see your assets. They want to see what you got laying around in the accounts. What pretty much are you worth, right? Because to kind of flip back to what I was talking to in the beginning, what happens is they're looking at risk. If they understand that, hey, if you're able to put 20% down and your credit's pretty strong, they're saying you're lower risk than somebody's only be able to put this much down and has a lower score, right? So they're evaluating risk. Yeah. After those documents are turned in, they're evaluating your risk. They come back and tell you you're approved for 250,000. Now you know how to filter your Zillow look. You know that, hey, I know I'm looking at these houses that's 350,000, but I'm approved right now for 250. This is a payment I can afford. So it's important to get pre-qualified by the lender so you can know exactly what makes sense for you to look for. Another question we get is, when is the best time to buy? People have all these notions, if you would. Some people say it's better to buy in the summer. Some people say it's better to buy at the end of the year. What we found out through research is it's obvious, it's evident that more people, yes, they sell homes, list homes in the summer. So, hey, if you want to have a shot at more inventory, then it would seem to make sense that the summer would be the best time, spring, summer. On the contrary, what that means is other real estate agents know that, other people know that, so you have more buyers. So you're competing with more buyers during those times as well. So if you're a picky buyer, what you may run into is things are moving fast in the summer. We're still in the seller's market, if we're still in the seller's market, and you're being so picky that you're missing out on opportunities.